Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these my charts. This was all my own original work, as I think you deserve to have that. So with that, LME 3-month copper. The supports of this market continue to be the same as they have been since mid-May, and possibly, if you take out one aberration, since late April. They are the green short medium moving average, currently at 97.01, then the mauve medium moving average, currently 9600, which held up the market the last 2 and 3 weeks ago. The bright red neckline extension, currently at 94.547, of the November 24 to February 25 reverse head and shoulders bottom, and the gold long moving average, currently at 94.22. Further to this, at the start of July, prices rose up into the overhead band of congestion between 97.50 to 99.95, an area I described 6 weeks ago as a gossamer area, even closing over it, but that was only just the once. And prices came back down to rest on the previous well-highlighted congestion between 93.95 to 96.06, which also contains the 50% Fibonacci line of the October 23 to May 24 move at 94.80. However, late 2 weeks ago, prices moved back up into that gossamer area overhead between 97.50 to 99.95. Now, for good order's sake, I'd like once more to recap, as I've mentioned here so many times before, the 3 congestions which we seem to be working our way through. The first was between 91.83 to 91.86 and is the weakest of these congestion areas. The second is the already mentioned area between 93.95 to 96.06 and is the one we became clogged down within over April and May, and from which we have moved up and away from for a while at least. The final one is the one we are now working our way back down within, and that's the also previously mentioned 97.50 to 99.95 congestion area. Overall, we have been chewing our way through these for quite some time. I added some thoughts on this 5 weeks ago when I said, and I quote, "It would be the cruelest of blows to the bulls out there if the ammunition for this attempt higher should finally run out anytime soon. Just remember the next congestion area overhead between 97.50 to 99.95, end of quote. Well, it looks like the disappointed bulls had a second attempt higher last week, but failed with a key reversal down last Thursday. And we are back now testing the base of the 97.50 to 99.95 congestion area. And some out there would be hoping it holds, despite the high last week being significantly lower than the one in early July. LME 3-month aluminium. As I've stated here many times, there are a number of patterns here, one within another, all happening at the same time, all affecting the market in their own way, though the picture may be starting to get clearer. To start with, and it's by far the most consistent one, is the bright red, shallowy bullish shift pitch hawk for the mid-December 23 to late July 24 move. For a while in March, we saw prices starting to establish themselves over the middle time overhead, currently at 26.81. But, as I stated 17 weeks ago, and I quote, "It was a tenuous hold over it and prices dropped down through it and have remained below, pushing further down. However, this pattern still works at the lower time, and that's currently at 23.71. And that's the end of the quote. I added 15 weeks ago to this, and I quote, "This is one to keep an eye on this daily chart, as the low of the move has been right on the bright red lower time." End of quote. We've seen the bright red lower time punctured but repaired with no closes below it, and this action worked pretty well at showing the low of the recent move down. Then, from late April to date, we have seen a number of attempts at piercing higher. In late June, the market pierced on the upside the flatlining gold long moving average, currently at 25.68, reaching up to congestion at 26.50 and just short with a big old 50% Fibonacci line of the old 2008 to 2022 move at 26.75. We then pulled back down to sit on the gold long moving average, which is within a small congestion band between 25.63 to 25.81, and started accumulating ammunition. We also constructed a mid-April to date dark blue bull channel, currently at 25.69 to 27.62. The lower trend line looks solid enough, though the upper trend line is still only a 2-pointer right now, but is far enough above not to be a concern just yet. Thus it seems the flatlining gold long moving average is the one to watch below, and the dark blue lower bull channel line, whilst above, we'll keep an eye on the bright red middle tine as well. Now interestingly, the dark blue lower channel line crosses over the bright red middle tine in late September, so we've got plenty of time for a significant move in between then and now. LME 3-month lead. The key features here, and some of them have been here for a while, had in the past all related to a very large broken descending triangle or a related broken descending wedge pattern. However, a newer mid-April pattern is starting to show itself. But first, the broken descending triangle and broken descending wedge patterns are both made up from an early July 24 to early March 2025 purple broken downtrend, now well and truly broken, and for the descending triangle by the bright red broken early August to late December 24 head and shoulders neckline, currently at 1957, which had earlier acted as an immediate support zone. Then for the broken descending wedge pattern, well, this is made up from below by a dark blue broken neckline extension of the July 23 to February 24 head and shoulders continuation pattern, as well as the earlier mentioned and common to both patterns, purple broken downtrend. We've had breaks out of these two patterns, false breaks both above and below, but in mid-May the market waltzed out more or less sideways for a final time, out of these patterns on the top side. The key congestions the market had to overcome were and still are all centered around between 2001 and 2003, quite a small congestion which gained significant attention, as I noted in my earlier video commentaries, which we have been embracing one way or another the last 2 weeks. We are right now have nearby and below to this congestion the mauve medium moving average, which is currently at 1995, the green short medium moving average currently at 2006, and the gold long moving average currently at 1998. Now 5 weeks ago prices took a flyer on the upside, overcoming all these, as well as congestion between 2036 to 2039, including the January 2021 high at 2039, and up to the next congestion at 2060, which was breached, but which eroded the bullishness enough that we formed a horn top over the last 4 to 5 weeks, and turned lower, reaching both the primary and secondary targets for this pattern. However, as I mentioned right at the start, there is a newer mid-April to date pattern that has started showing itself. It's based on the bright green mid-April uptrend, currently at 2021, and was breached on the downside 2 weeks ago, then seemingly repaired, only to be breached again on the downside this week. This bright green trend line was originally seen by me as part of an ascending triangle pattern between May to June, but has developed into a mid-April to date bump and run reversal pattern. Now, if this pattern decides to follow through on the downside, then we will have a primary target X down at the 1964 zone, just above the bright red extension to the August to December 24 head and shoulders neckline, and a secondary harder to achieve target X1 down at 1916, and that's coincident with the low of January this year. Okay, so as I said 2 weeks ago, and I quote, the feature on this to watch out for is that a second smaller bump may now happen based on the bright green trend line before a further move lower, so watch out for that. The issue with any move lower is not the second bump that we have, but as I put it 5 weeks ago, and I quote, also have around here a small congestion area between 1971 to 2021 dating from early February to very early March, though I'm unsure how good this is. The seeming stabilization over the bright red neckline and the newer stabilization over the 50% Fibonacci line at 1971 suggested further attempts higher. However, the resistance from the various moving averages and the small congestion of 2001-2003 seem to be up to challenging it, and prices have been somewhat bracketed, end of quote. 2 weeks ago we saw a drop down to the 50% Fibonacci line at 1971 before a pullback up. However, the pullback up has seemingly stalled around this bright green trend line again, and it'll be interesting to see which overcomes which as the market is still battling on. Will it be the bright green trend line capping the market, or will the congestion in the 1971 to 2021 support the market enough? The pullback up last week stalled at the bright green trend line, and it will be interesting to see if that was enough. Finally, there's one other point I would like to make, and it's a point I've been making here since the start of this year and will continue to do so going forward. It has been and still is to me the most important point of all. So, at the end of December last year, we saw that 2024 had created here a very rare and very large pattern, an annual key reversal down in LME 3-month lead. Hence, one should look at all things going forward this year in this metal in the shadow of this longer term bearish pattern.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.